Zimbabwe's gold-backed currency has posted its first gain in more than 2 weeks, which a country's central bank is attributing to its tighter monetary policy. Let's bring in Bloomberg's Ondiro Oganga, who has been following this story for us. So, Ondiro, walk us through the story. I mean, what can we actually attribute this momentum to?
Jen, you mentioned it quite briefly in the intro. It all boils down to the central bank. On the 27th of September, we saw them devalue their currency, the ZiG, by 43%, and it went from trading at about 14 to the dollar to 24.4. Simultaneously, we also saw them hike their rate from about 20 basis points to 35 basis points. One, to remove the volatility from the currency and also to tame runaway inflation that went from about 5.8% to 32.7%, mainly because of the deterioration of their currency. And now, almost a month later, a member of the Monetary Policy Committee tells Bloomberg that the natural expectation was for the ZiG to firm up, and that's exactly what we're seeing. This firm up is of about 2.4%, and the ZiG is trading at about 27.99 in the official market, and in the parallel market is about 35 to 40, which is an improvement from the 40 to 50 that it was trading at previously. And we are also seeing that the government is really hell-bent on ensuring that this currency works, because it's their sixth attempt in 15 years at having a stable currency. We're expecting the Ministry of Finance to announce a couple of measures to increase demand of this currency, one of them being requiring payment of utilities with ZiG, payment of duties, and also local council payments. They say that if there's demand for the ZiG, then the monetary policy interventions that they've put in place will work in a complementary manner to stabilize the currency.
Fascinating. As you say, there have been so many attempts from Zimbabwe the last few years to stabilize the currency. Ondiro, I'm going to ask you a bigger picture question because one of the major topics that we've been discussing here at ADIPEC is obviously some of those long-term energy themes, but then also how U.S. elections may impact the direction of travel for energy markets. And I just wonder whether similar conversations are being had. Definitely many world leaders are paying close attention to what happens with these U.S. elections. But what is the feeling from the African continent of how things could change and the relationship with the United States could change post-elections?
Jumana, African leaders are closely following this election because if we just try and profile the various candidates that are vying, if we start with former President Donald Trump, he said time and time again that tariffs are a really beautiful word, and he's for the protectionist trade policy. We are likely to see import tariffs affecting certain countries and regions like Asia and countries like China. Now, if you look at China, they're Africa's biggest lending partner and also trading partner. So if they sneeze, Africa is definitely likely to catch a cold. And then there's also the Africa Growth and Opportunities Act, which is known as AGOA, that needs to be reauthorized next year, and this could be at risk if President Donald Trump comes into power. You look at a country like South Africa has really good trade relations with the U.S., and so South African goods in the U.S. could also be at risk. If we look at Vice President Harris, she's thought to be more friendly to the African continent. Her strategy is perceived to potentially bring more investment to the African continent. She could visit, she's previously visited as Vice President, went to Zambia, went to Ghana, went to Tanzania. And yesterday, when polls were showing that there's a less likelihood of a Trump victory, we saw the South African rand rally by 0.8% to trade at 17.51, which is the best level it has traded in over a week.